Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And we are back together today, guys.
Yeah.
It's been a couple of weeks. I'm not sure.
You're too far away.
Far away. Superheroes, high five. It's been a couple of weeks. And I did a show. You and I have done a couple before together in his absence. It's been a minute.
I tell you, man, getting us all together, it gets tough.
It's still, we're still waiting on just me and Will one day.
Yeah.
Just you two guys.
One day.
You guys, I should just leave you guys.
I know. Andy never fails us, huh?
Yeah, there'll be one camera's off and maybe it didn't record.
Don't worry, buddy. Andy will be here.
Yeah, but,
Did you guys hear that part where you guys just started talking about nonsense?
yeah.
yeah. No, we
Next
edited that
week,
part
Andy
out.
will be here by himself.
But you actually just came back.
Yes, I did.
You were up at EMC.
Yes,
At
correct.
the parent company now, our
Yep,
new parent company.
Our new parent company.
So how was that time?
You know what? It's a lot of fun, especially when you know there's a lot of people that are in the same mindset, and it's all about growth and just figuring out better ways and solutions to find for our clients. They're just always just on the up and up.
Yeah.
And so I feel like that's just actually super cool, super dope. So
Well,
it was fun.
One of the things that we announced on last week's episode was that, with going to EMC now, we are in multi-state. So we're going to end up talking more about that coming up soon. But
Game
wanted
changer.
to welcome you back to the
Thank
show
you.
because that's why Brian and I were by ourselves last week.
Yeah.
Memo was out with the crew up at headquarters there. So and you were actually part of a special group that got invited, right? The top 20 people in the entire company got invited up to Irvine, right? It was Irvine?
Yes, it was actually in here in Irvine. So our headquarters is here in Irvine, and it was fun, man. I'm telling you, Joe Shalabay, I got to do a quick shout out for you. I'm so impressed and so appreciative of everything that you actually do for us and for the whole company as a whole.
Awesome.
So, very cool guy. Young as heck too. Crazy.
Wait,
But I love it.
younger than you?
Oh yeah, way
Younger than me?
Oh yeah.
Not younger than him.
No, maybe there. No.
Oh man.
No, but anyhow, you're in the right place when they're all about giving back. They're all about the community.
That's cool.
And just figuring out a way, how do we give back to our clients? How do we just set them up for success? So I freaking love it.
Well, we are at a critical point in time for a lot of different reasons. The shift for us as a company, number one, it's a big thing personally for us, and also allows us to now do more for more people that are in our client database and referrals that are going to come in. The other thing is we're at a critical juncture of the year. It's the fall of 2024. We're getting towards the tail end of October now. We got the election just a couple days away. That's going to be another thing to contend for. And what we're going to talk about today, guys, we're going to get into the articles right now, but this is some evidence of the shifting sand that's happening demographically and on the footprint of real estate across the country. So I'm very particularly interested in today's show.
You know what, Andy, I'm glad that you bring that up. A lot of us don't understand how fast our market shifts. A couple of weeks ago, it was all about refinances. Rates were so low. Everything was good. Everything was just we were so inundated. All of a sudden, it's like crickets the last couple of weeks. As soon as rates started going up and we get that great reading on that jobs report, 254,000 jobs created. Come on. But anyways, I'm not going to say it's a fluff like they did the other $880,000 last dollars. 880,000 jobs created when they're like, oops, we're sorry. It was our mistake. I really think, and that's the thing, people. Those are the things that actually affect their interest rates. It's not, we all think, the Fed reduced the rates. They're announcing they're going to reduce the Fed rate again. And still don't see the interest rate. So that's just to tell you, there's far more important things like jobs that really will make our interest rates go in a different direction.
So did I tell you the math behind the latest jobs number?
Please do.
Okay, no, it's interesting because it actually means something. So remember how they had overstated jobs by that 800,000 or whatever?
880.
So if you divide that, let's say by 12, just for simple math, let's say that's 60,000 jobs. On average per month, they overstated. What is 250,000 minus 60,000? 190,000?
Yeah.
Guess what their estimates were for that month's job growth?
Yeah.
184.
Oh my, yeah.
So their actual estimate for jobs would have been in line for what they actually are, but their saying it's 254 or
Yeah.
whatever, which on average is about the overestimated monthly average based on the last 12 months.
Yeah, that's crazy. I'm glad that somebody knows how to do the math, right, Brian?
Crazy, right?
Yeah, I need
But,
my
but here's the
frijoles,
problem.
yeah.
The problem isn't that I do the math. The problem is the market reacted to that in a negative way for mortgage
Very.
rates. Mortgage rates went up right away.
That's it.
But again, if we go and look back and go, oh, that's, let's say, falsified,
Yeah.
or it was inaccurate. Let's just say inaccurate. Let's not say falsified. If that was inaccurate, well, then that's inaccurate at the same clip that it was inaccurate for the last 12 months on average.
Yeah.
So are we going to find out once we get to November, December, that that number was bullshit?
Nap.
Welcome to this week's show.
Yeah.
The first article today, guys. First article is Millennials, the most likely group to consider political views before they move. Brian, take it away.
Yeah.
This is all you, man. You're at the tail end of this millennial stuff.
Exactly. You know it better than
I
us.
read through it all, and honestly, the only thing that came to mind is that, millennials are at the point in their life where they're at the golden years where they're going to plant their seeds for their, families to come. Therefore, any decision they make is going to be closely tied to whatever, political view they have, because it's going to affect them in a certain way. But also, I feel that just in general, people want to live where people have the same mentality, they have the same views, and they, like the same things. So I think it was pretty accurate what they said here. And yeah.
So do you and your friends talk about politics a lot?
No.
You don't?
Not at all.
Okay. All right.
I'm probably the only one that's the most inclined to speak about politics. Everybody else honestly does not, but honestly, that's only one part of the general. There's, I think, the older part of the millennials that are a little bit more in tune with this. As far as my generation, as far
I see what
as
you're saying.
my part of like my demographic, we don't really speak about this. We're still talking about boy stuff. I speak
Boy stuff.
I speak
Like they're drinking quarters and doing all that stuff.
No.
No, I think there's chest hair finally came in.
Okay.
Like, we're not chatting about like, hey, depending on what friend it is, I'm not talking about politics, stuff like that. I would say I'm the only one that follows politics the most. Like I was just telling I watched the Al Smith, the whole dinner, and I enjoyed it. And I was actually telling Michelle, I'm like, I feel like I'm a dad when I start just watching the news and putting on stuff. I don't even listen to music anymore, which is ridiculous.
Yeah.
Like all I do is watch and consume like politics, economy. Like you
Economic stuff.
you look at my YouTube stuff, and if anybody my age would see, like, how old are you? 30 or 40?
Yeah. Yeah, exactly.
Oh my God.
And I still think like Brian, because I know you so well, I don't think you get into politics anyways, right?
Nah,
like
it's not
you're
something-
more, if you watch the news, it's seeing the market conditions, what's going on. It's more of that stuff. And obviously because we're in the lending industry, it makes it different for your boys to actually get into that, right? Like they're not. They're gonna be into like, bro, we gotta. My handicap is not that good over here. Like it's just so different. We gotta go golfing.
But you make a good point that I'm literally watching it because anything can affect our industry, and that's where we get leverage, knowing how to bring that information to our advantage, and, helping other people understand.
But that's a good contact point, though, because for you, it's relevant. I mean, that's what the article is saying, is that for this specific segment of our population, it's relevant to them, like a higher percentage for them than other percentages surveyed. And you're saying it's relevant to you, maybe mostly on the professional side, because it does impact what you can and cannot do, or what customers might do or not do based on what's being surveyed and what's being asked. This is 2,203 people surveyed, so that's a pretty good sample size. I mean, anytime you got 1,000 people or more, you start to see some homogenization, they'll say. So it's like you could do 10,000, 20,000, and it's mostly going to look the same at some point.
But then I would also argue that the people that are probably more inclined to this information, being important to them, is people that are, business owners, people that are self-employed, people that are, probably have multiple business or investors themselves, opposed to somebody that isn't, that tied to their employment or their income isn't that tied to the economy. I think those are the people that are going to be actually more, inclined to be like, yo, why is this happening? This could actually affect my business, my flow at work, or my income that I'm bringing home.
So that I got to be more cautious.
Yeah, you'd be more cautious. Like it's exactly with us. Like if the market's up, good, we're going to get clients. We got to go out there. If the market's down, okay, then we have to know how to maneuver through.
It's so true.
Even here, they're kind of referencing that even some of the millennials that have purchased homes, they've done it with other friends even or family. So I know we've seen that here firsthand. I think part of that is that shifting sand I was talking about, where it used to be you buy your home, and a lot of times now you hear some people say we're buying the home we're all going to live in and share, and that is, I think, working. And part of that is I think a subtext of the necessity of a qualification.
Yeah.
And the other part is the willingness and the behavior to want to and be okay with that.
Yeah.
You know, this actually brings me back to a few episodes back when we had that graph from all the generations and
The demographics and stuff,
demographics, and we saw which ones were more important to them. And for millennials, housing economy was one of the top items that was on our list for most important to us, which is very relevant, like I said, because of the fact that everybody's at the not at the peak, but they're at that point where they're earning a little bit more than they were from their entry level jobs. Maybe some of them are getting raises, and they're getting to that point where like, okay, I really want to start a family. I want to start investing. I have a good enough base, and how do I go from here and establish myself? And I think things like this really affects their decisions on what they can do, what they can buy, what they can invest with, and so I think that's they're really accurate on this.
Yeah,
I think it's gonna be. I know it's. Millennials were influenced a lot. We have a lot of social media. I mean, you guys are all about that. I remember when you first came in, started working with us, you're all about your video, your social media and all that. And so
hardcore public accountability. Remember when you first started here and you used to do more videos?
Yeah, so
now it's just long format. You get me every week.
What I'm going with that is when we started, we looked at you like, damn, man, like this kid just picks this thing up and he goes, right? And so it just tells you guys see a lot of this, so therefore you guys get a lot of influence. And because of the older generation that pay attention more to politics, right? Your guys' influence, like, oh, I see it makes more sense, so I'm gonna actually pay more attention to that. And being that the millennials demographic has been the ones that have been purchasing the most homes in the last few years. Yes, this is going to make perfect sense, especially right now coming towards election time.
And even true for Gen Z too, because it's like millennials and Gen Z are like right there, running mates 1 and 2 of home purchasing.
Yeah.
And so as far as generations are concerned, and I think that there's a quality that's similar culturally, because you see some cultures stack multiple generations together, right? Hispanic cultures do this. I know a lot of Pacific Islander culture, Filipino culture does this. Yeah. And where you'll have a grandma, you'll have, let's say, parents, and then they have their kids. You'll see 3 generations stacked in a home. And that same kind of willingness to live with other people is similar even in friend groups at this age group, though. And I think some of that is partly just the social construct of it, beyond the mathematical need for everyone to pitch in for it to make it work financially.
But I mean, a lot of people like now choose to live in places where it's like cohabitable, where there's plenty of people, there's common areas, there's communities built for people to be able to go out and hang out and just be out in a community where people are
No, you're absolutely right. Look at everything that's being built around us.
Oh yeah.
Everything's before it used to be like single family residence, try to build it, and now they're like everything's so condensed that now how do we build up?
Yeah.
And how do we cram everybody in? And then at the same time, how do we put more parks or shopping around there? Like, and it's gonna be not shopping, it'll be more like restaurants, like where people could congregate right there and have a good time and stuff like that.
It's like that community meeting point places, and common areas.
They're like, what I'm noticing is they're making a lot of mini cities and little towns, like little downtown areas where they're like similarly one-way streets, condos with apartments with the bottom, with the business at the bottom. So I'm seeing a lot of that throughout San Diego, and if there's anything new being built, is that, and then up.
Exactly. Like it feels like the Truman Show. You guys ever seen the Truman Show?
Yeah. It was before he was born, I think.
So it's Jim Carrey. It's a Jim Carrey, and you're actually in a bubble. He actually was born like in a dome, and they raised him in there.
Fake place.
It wasn't until he was older, I want to go travel somewhere. And he just couldn't get to that destination, but because everything was so nice and beautiful around him, he had everything. He didn't need to go anywhere. But that's how I feel like everything's being built around us is like that Truman Show.
Yeah, that's so true. You're like in a trap.
One thing I wanted to make sure I mentioned on this particular article is that even someone who was quoted here, who had kind of agreed with the sentiment that politics was important where to move, but the 2 things that they mentioned that were more important to her were work and family. Where am I going to work? Economically, what's going to be provided for me? And then family, proximity to family. That actually might work both directions. I want to be close to family, or I need to get as far away from them as possible.
Depends.
So
two spectrums.
And the reason I wanted to make sure I mentioned that is because, it's not just because the headline says something, it's not true for all. I mean, this is just statistically a difference in variation between millennials and other generations. So it's not true for all millennials, of course, great. But also, this is where it comes down to the personalization that we see when we meet with people. They have their reason for doing their thing. Yeah. And we can broad stroke a couple of these things about the economy and about rates and elections and all that. But when it comes down to it, when someone comes to meet you guys at their desk or they call or email you and they want an appointment, they've got their own reason. And sometimes the number one thing is not politics. I don't think I've ever heard someone say that, ever.
I don't think I've ever gotten a client that says, hey, Brian, look, I need to buy a new house because this president is just, God, havoc.
Yeah.
I still waiting.
Yeah.
I got conservatives on my right, I got liberals on my left, and I'm an independent. I need to move.
They passed Prop 34.
I need to move. I need to move.
Hey, I'm ready to buy a house now because Bush is gone.
Oh my God. Jeez.
Hey, but
way back.
I had to wait 20 years to make sure he was really gone.
Yeah.
Oh my God. He's not coming back, right?
Exactly.
Oh my gosh. Okay, you guys, let's move on to the next one.
You kind of close it perfect. Nobody talks about politics when buying houses.
We're already flirting with going now to insulting millennials. So let's actually let's
Well, let me start by saying then.
let's move to the next thing.
Look,
This is the housing affordability crisis doesn't exist in much of the country. So why aren't Americans moving? Hold on, brakes. What?
Damn.
Now, this is a headline that's going to catch people and go, what are you talking about?
Correct.
Affordability is crazy. It's because the disparity between the most expensive places and the least expensive places is insane. So point of reference, if you're not able to look at this article and you're just listening to us, the article talks about this massive chasm between the nation's priciest housing markets and the most affordable regions and how big they're growing. So you have Silicon Valley, which eclipsed $2 million during the second quarter of 2024. And then comparatively, you have the nation's cheapest market, Decatur, Illinois, at $126,700, a 16 times difference between those two. So when you ask the question, why aren't Americans moving? I mean, okay, could pick a reason out of a hat. It could be anything like work and family, like we previously mentioned. It could just be whatever. Some people, I don't want to live there. I don't want to move to the South where it's muggy and 100 degrees for 6 months of the year. Pick your reason.
Well, Florida's actually facing a lot of that. A lot of people left San Diego or California to move over there, and now they're, hey, we didn't know we had that many tornadoes or hurricanes, and now I want to go back, right? Like people are going back. There's such high inventory over there now. So we're starting to see that.
In Tampa.
So what are some of the reasons that you guys, what are some reasons you would guess people are unwilling to move?
It gets expensive. So it's expensive. For me, it would be expensive. Even though I can sell my house for X amount, if I put a large down payment on the next one, it's going to still be more expensive than what I'm paying now. For instance, my payment right now on my house is $2,600 property taxes insurance. If I go and sell my house and put that $1.5 million down payment on another home, which I'm thinking I'm going to buy something probably bigger than what I currently have, my payment's going to be probably like $4,000 or $5,000. Why would I want to do that?
Yeah.
Unless it's a need, then I would have to do that. But for a want, that ain't going to happen right now.
Okay.
I think like we mentioned last week, one of the things that I saw and they said on the article is that the election is putting a halt on everything and on the markets as well. And I feel that at times people are waiting, like we were saying, what's going to happen, because a lot of people aren't moving like they used to because there's a lot of people also laying people off. So I don't know if I'm going to have my job if I go somewhere else.
Yeah.
A lot of people were working from home. Now they're not working from home and they have to go back to the office. So they don't have the ability to be able to move freely and be able to work from home. And then, a lot of other people just, they're okay with just taking a sacrifice and being able to, pay a little bit more because they want to be in the comfortability of being by their family, being in a place where they like the weather's nice. So I think all that plays a part.
Yeah, it definitely feels like we're mostly in a needs-based kind of moving economy. There is some choice-based, and again, this is kind of going back to the political part a little bit, where people are saying, I don't like living in a red state or a blue city or whatever, and I'm going to move to another place. That could be a base reason, but then also there's the economics like you're talking about. Maybe you can leave California and you're going to go to, let's just say Miami. Okay, well, that's another expensive place, but now in a rate environment that is much less favorable than the one that you're currently in when the situation you're in now, having refinanced a couple years ago. So I think that's also true for people. Now, the other thing too is I think it's possible. I don't know statistically the number of what I'm about to say, but it is possible that our current housing metrics, when you look at September, October, November, will have some suppression due to election influence, where people are like, I don't know, and I'm waiting, because we're seeing articles about that. We're seeing people talk about it. People saying, I'm going to wait until I see the outcome before I decide. Yeah. Well, that all represents decisions that could have been made that maybe weren't, and that's going to show up in these numbers. So when we look back, we're going to go, oh, well, pending home sales were down, new home sales are down, refinances slowed down. Well, yeah, in this little window right before the election, I'm kind of expecting that. I think it's hiding some of our actual numbers.
Yeah, of course.
So I understand. I get the premise that there's a lot of, let's say, less expensive places to move in the country. However, I think that is not everyone's cut out for that.
Of course.
I think when you look at population density, when you look at like services, like there's a lot of people that love living in rural areas.
Oh, of course.
I wouldn't mind living out in. I talk to you guys all the time off camera. I want to go
you're
to
the
Humboldt.
only weird one here.
Yeah, I'm the. Yeah, but it's because I want to have horses
Hello?
and that whole thing, and like I just love that. I absolutely love it.
Yeah.
But it's still close enough to the city that I'm not even outside San Diego County still.
Right,
I'm still inside the county lines. I'm talking about
But in the
people
weird
making
part.
the argument like go to Oklahoma and get out to parts of Illinois and South Dakota. It's like that is maybe for some people, but for most people they're already there.
Yeah.
I don't see a lot of people leaving major metropolitan cities going to those places. Do you guys see that?
No, the only thing that comes to mind is I had a conversation with somebody that I connected on social media with, and they actually live in Las Vegas, and they bought out there about 2-3 years ago. And she's like, well, all my family's out there. We bought when it was cheap. The rates were low, and now we want to go back, but I'm not sure we're able to afford or can we get a house out here. So we were just having a conversation, but she's like, at this point, anything really just works for us. We just want to be back home. And we know we're probably not going to get the house that we want, but, we'd rather be home. We'll sacrifice. We'll figure it out. I'd rather be at home where the weather's nice, where I know the area, where my family's there, than in, Las Vegas where it's really hot and I hate it here and I don't know nobody.
Ooh, man. Those are those things. Those are those things. Like even in your demographic of being a millennial, or I don't know if this person is.
Okay. Yeah.
So that's the thing. Like some people are saying, like, yeah, politics might be important, but it's like, hey, I want family, being close, the weather, things like that. Like those are major things for people.
And she asked me, she's like, truthfully, like, what advice do you give me? Should I wait? Should I start? And I told her, honestly, if your long-term goal is to be in San Diego, then the sooner you make it out here, the easier it's going to be for you. Because one thing is that we know for certain, rates are going to come down. But in San Diego, like I said, and I told her exactly, we're landlocked. We can't build anywhere. So unless more houses come in the market, more people start to sell, which is highly unlikely, houses are going to either stay at the levels that they're at or continue to go up higher throughout the year. So my best advice is if you have to sacrifice and you guys ultimately want to be down here, it's going to be the path of less resistance if you guys do it sooner rather than later.
And that's great advice. We haven't seen, like, people were expecting, like, we're going to see a house crash, I'm going to wait till it's not happening. Nope. Even though right now we have 734,000 homes available, it still hasn't happened. Things have leveled off, but home prices have not gone down drastically whatsoever.
Mm-hmm. Yeah, and this is a situation where San Diego made the cut and made the list, but it's kind of the wrong list. It's in the top 5 most expensive average home prices. San Diego's on the list. Yeah. Of the top 5, 4 of them are in California. 1 is in Hawaii. You have the one referenced at the top of the article, San Jose or Silicon Valley. Then you have San Francisco behind that. Then Anaheim. Then you have Honolulu and San Diego right on the heels of Honolulu.
4 out of the 5 are in California.
4 out of the 5 are in California. But also, if you flip the page, you go to the second to last paragraph. Crazy. This is all the places that people from California left to. Homeowners from California and Seattle. I don't know why they picked Seattle specifically because of Washington, but whatever. California and Seattle moved to Arizona, Nevada, Utah, and Idaho. Guess where we saw a really fast rate of increase for home prices?
Idaho.
Yeah, Idaho, Utah, Nevada, Arizona, Texas, Florida.
Texas.
And you see that while residents in the Northeast flock to Florida, Georgia, and South Carolina. So you do see some migration patterns evolving here. I think most of the people that were going to move due to like lockdown rules and things like that, they already did it. It's already done. Anyone who's going to continue to move because of politics, whatever, they're going to wait until after the election. And I think we're going to be in a stalemate until then.
Yeah. I mean, I'm not going to say a last name, but we had a good friend of ours move to Texas.
Yeah.
And
came back.
Yay.
And
they
you know
were
what that
bragging
was?
about it. But no, hold on. In the beginning, they were selling us on Texas. You got to come to Austin. Like, you don't understand. You got to get over here. Like, it's got these benefits. Next thing you know, like 6 months later, it's still great. But you're fighting against mosquitoes, Yeah, a year later, it's like, no. The excitement wasn't there.
And those external factors that people don't, look into, actually factor in because they're like, oh, well, I'm going to pay less. This is going to be great. But then your actual situation of living is like crap.
Then, remember, not only do you go, but you have a family because a lot of times people are relocating because their affordability with the family is a lot more difficult here. Yeah. So they have to move to a certain place. But then you have a daughter that's getting depressed. Because they don't like it, and if your family's not healthy, then it doesn't matter what you can afford or what you can't. You got to go where your family is going to flourish, where you're all going to be happy. This is about, combined effort. And that's what we saw. Sure enough, they come back and now, bro, it's like they didn't go buy anymore. They're renting right now because that's what they could afford for the time being.
Yep.
But their family's great.
And in this case, it was family first, and then it was actually allergies. It was weather and allergies.
There
because
you go. Okay.
Over the course of time living there was no solution for multiple people in the family. They're like, well, we can't stay here. Because the weather and what is around us isn't going to change, and so they actually couldn't stay. Like, when you have like hay fever really bad, but then you have that for like a whole year, and then you have it for like the next year. Like this, I can't. See,
those are things I never thought about is like allergies, stuff like that. And you're absolutely right. Like I got allergies to mosquitoes. I hate those things. You
do?
Oh, dude. And you know me, I got to put lotion. I got to put cologne. So it's like these things just attract to me. It's like,
I don't know what it is.
Lotion, cologne, a little more lotion, and then more cologne, cologne.
But
and the cologne for the lotion, make sure they protect the lotion.
But those are all things we have to consider, right? Family is first, no matter what. Yeah. And so I'm just glad now we have him back home. He's much happier. I see the family happier, and it's like, bro, there it is.
I think that instead of bug spray, you should just use cologne. If a mosquito like lands on your arm, you just spray him with that cologne right there. I think that'll do the job. Can we move on, guys?
That's it.
All right, let's move on. We're going to go to this. Lower mortgage rates won't solve home builders' problems. I totally agree with that because I think there's a lot of variables that affect home builders. This is citing home builder sentiment, which has been on the rise for a couple months in a row. I think that has to do with the plateauing of rates. So there's like some influence in that, but I don't think that's the whole story.
Yeah.
We've talked numerous times about how people are expensive, how the products of building a home are expensive, how the place you can build in is potentially also very expensive. And then you have whatever municipality and rules you have to follow to
permits,
do that.
all that good stuff that goes into all of that.
Yeah, last week on the show, I was like, it's all these P things. So I think that the mortgage rates will help, but I agree. It won't solve the home builder's problem. It's only one little facet because it's not even a home builder problem. It's a buyer problem. Now, if they're borrowing money, then the Fed rate coming down is going to help them on the lending side for them to borrow to build, but then for them to build to sell, now you're still talking about all those other elements.
And we still have the worst affordability issue in history.
Woo, congratulations.
Yeah. So how are we going to do that? Here's the other thing that I've been seeing is, building permits are high. Well, yeah, look at all the hurricanes, everything that's going on.
Right.
Everything requires a permit. When people are doing fix and flip properties in some states like Texas, there's permits required. Dude, and those are all delays.
Insurance is going to go higher again.
Exactly. Everything. So I get it. And I love how they just, our government just spends everything like everything's flourishing. Oh, well, permits are high. There's a reason for that. Hello. There's
about 40,000 homes were demolished. Well, permits are up 40,000.
Or where it's all flooded, right? Everything got flooded. Like, everything requires permits. Of course, there's going to be a lot of permits, but don't make that seem like the market is doing great because of that.
And I think this is cause for that thing you're talking about. This is cause where you go, okay, what's really going on under the surface? How many other things are impacting and affecting this directly and indirectly? Mortgage rates is more of an indirect influence because there's direct influences like materials and supplies.
Yes.
There's going to be I shouldn't say there's going to be a shortage. Those supplies in the places that need to be rebuilt are going to be in such heavy demand that it might even cause delays because there's demand, because there's only so much inventory and only so much time, how much you can get at a certain time of whatever material you're looking for.
Exactly.
So,
and then here's the other thing that people don't talk about, but good thing that the strike for the longshoremen was over.
Oh yeah, dude, that's
because they were back east. That didn't really affect us over here. But Tanya was laughing because I go to Costco right now and go buy toilet paper. Gone.
Jen said the same thing.
Paper towels.
She's like, it's all gone. She goes, I wasn't even there looking for it. It's all gone.
Because, all these things are going to affect all that. So guess what happened to toilet paper at that time?
Gone.
The shelf was empty.
Now, whatever. And if they did have anything, did the prices stay low?
No. They were price gouging.
I don't know if it's true or not. I saw someone flash something on social media that said like 95% of our toilet paper is made here. I'm not sure if that's true or not. But I was like, well, if that's true, that's pretty funny that everyone went and ransacked the aisles for that. But.
Yeah. But, these things do affect, and the back east, that's where they're all affected over there.
Now, it's temporary too.
Yeah.
It's temporary, I think. Right? I'm sorry, I know I'm cutting you off.
Yeah,
I think it's temporary
good.
Only till January something, January 1st, January 15th, something like that. But they have to negotiate between now and then in order to avoid a strike.
And that's the only time that Biden could step in. He's the only one that can go in there and just say, nope, you know, you got to give these contracts back to the, you know, to the workers.
Dang, I don't know enough about that. Okay.
Yeah.
I don't know enough about that.
He wanted to stay out of it. Like, no, keep me
Let
out
them
of
figure
this.
it out.
Make them figure it out, work it out. Well, okay. What other thoughts do you guys have about this? Like, let's make this kind of semi-local here in San Diego. The stuff I see being built is ADUs, right? Which you're doing right now. I see a lot of those happening, and then I see a lot of multifamily things happening: apartment complexes, condos, connected buildings that are sharing common walls. I don't see a lot of single-family home building right now.
Again, because of our density, you know, everything that we have, like we're so landlocked. Because remember, by here, when we look to the east, these are preserved mountains. We can't build on those things. They're just not going to allow you.
A proposal got killed earlier this year because of that.
Correct. So it's like we can't do it. So how are builders going to come in there? We're just going to build up, you know, and we're going to do more townhomes type of deal. So we've been seeing, and everything's now like 3-4 floors. Where before, like the max you would see is 2, 3 here and there. Now it's like, bro, we're seeing 4 floors.
Yeah, remember like 20 years ago, like a 3-4 townhome? Wow, that's kind of cool. That's neat. That's new. Now they're like freaking everywhere.
Who wants to exercise and do that? All the people that do have those, they complain about it. They're like,
well, I mean, look,
because then you have the kitchen, I think, like in the 3rd floor.
Depends on the design. I mean, look, getting up is a hard part. If you want to get down fast, just fall.
Yeah. There you go.
Just roll down the stairs.
Some have elevators.
You can. It gets too expensive.
No, it comes built in already. It's a premium. You pay with the HOA.
Built-in elevator? That'd be cool.
There's some out here.
Wait, in the townhome?
I promise.
Like a dumbwaiter or an actual person elevator?
Like a it's a door you open and you go up because there's something that takes you up.
Oh, what? That's super cool.
I promise. It's over here by Millennia.
Okay.
Well, here
I will show you.
Okay, that's okay. You can show me. We'll go look on a Tuesday someday coming up.
All right.
Okay. I want to be done with this one. We're not going to fix the home builder situation with mortgage rates.
The plain solution is we need to build more.
Well, yes, but the problems of why they're not building, we're not going to fix in the conversation. And they're not going to be fixed with mortgage rates or even the lending rate. It has to do with so many other variables. And I'm wondering at some point what we're going to do about the insurance thing, because that's, again, going to come full circle. Because whether it's admitted or not, whether it's public or not, or whether it's written in an article, I know that the challenge for people to get insurance has to be factored somewhere in the building formula and deciding where we're going to build and how. Because if people can't get insurance, it's hard. I understand you can go so far and go, you know what, that's the customer's problem. You know what, if they can't actually buy your product, that becomes your problem.
I just got insurance for a client in Poway. It is a 3,300 square foot home. You know, right? It's value about 2.2, $7,089.95 for an annual homeowner's insurance.
Whoa.
Yeah.
Wow.
So
that's crazy.
We used to always kind of guesstimate $85, $150.
That was on the high end.
Now we're like, that's
Dude,
what it is.
That's like $565,
right?
500,
more than a car payment.
I quote at 100 to 150 now.
Yeah.
$585 a month.
And 100's like, I hope I get 100.
Yeah.
Wow, that's a car payment.
And
That's a nice car payment.
And then you got to remember, if there's a disaster like it was back east, certain insurance companies won't cover certain things. You have to have an additional rider on that to cover certain things.
The other day for one of the insurance that we wrote, I never got this before, but it's common, but they asked for an actual physical video of the whole property. And every time we've done insurances, when do they ever ask for any video physical inspection? So they said, hey, you either take it with your phone or we have to personally send someone out there.
No way. Yeah. I haven't heard that yet.
Yep.
Oh, okay. And I'm not going to ask who it was on the air.
Mercury.
Okay, well, Mercury.
There you go.
Well, hey, you know what? Thank you, Mercury. I appreciate you still doing insurance in the state of California. We really appreciate that. I'm saying that sincerely because
and I told the client the truth. Look, insurance is really expensive right now. They're taking an extra measure because they just want to make sure that everything in the house is what they see on the reports and that it all makes sense. The last thing they want is
you got to remember there's so much fraud out there too.
Yeah, exactly.
Oh, heck yeah.
I mean, so many properties are getting insurance and there's no property there.
And the property's not not brand new. It's a pretty old property, so it's not like,
Yeah.
I understood why.
Because remember, they have all this data, what year it was built. They get all
see
this
all
data.
that.
So,
Cool. Don't tell me, show me.
Yeah.
All right. Cool, guys. Well, we'll wrap it up today with this last one. It's called The Great Stay, Why Homeowners Are Staying Put. This is coming from Housing Wire, so it is a little bit housing specific. I left this one for last because we have covered this a little bit for people having golden handcuffs. They are enjoying their rate. They are moved. If they were going to migrate, they've mostly moved to the place they're going to move and they're staying. Yeah. So I get that we've had this thing called quiet quitting, which they kind of talked about here. They didn't say quiet quitting. They said, people quitting their jobs less often. Companies are, depending on the industry, they're either hiring a lot or there's hiring freezes.
Yeah.
You see some retail businesses having challenges and closing stores for a variety of reasons, which I'm not going to cite here. So you see some companies that are contracting, some companies that are like in technology or AI, they're rapidly expanding. Mm-hmm. And then you have a lot of people just staying put, because I think what's happening is psychologically they have decided that this is the best it's going to get. And they're like, you know what? I'm going to stay in San Diego with my low rate. I'm not going to sell my house for whatever it is, 1.5 or whatever, and then move out to somewhere else and then have a more expensive payment with a lower loan balance because the market conditions have changed. I think this is a purely psychological over financial situation.
Yeah.
And I think it's happened over the last 3.5 years, because, before that, people weren't thinking like that. They were migrating, they were freely moving, they were selling their houses. But until we go back to that type of confidence in the economy or people spending, then we're going to basically be, in the golden stay, or the great stay, because people aren't inclined to move because they're going to pay more. And then the people that do move, they're like, well, shoot, now I better have a job over there, or my job better let me work remote so I could keep, bringing the same income while paying something less. And I think that's what they said, that during COVID times, everybody was still getting paid, what they were getting paid, but now you'd have to go to the office. So you could leave California, leave whatever state you're at, go to somewhere more affordable, work from home, and arbitrage the rest.
A lot of people did that.
Yeah.
And now they got to come back. What are they going to do?
And when you mentioned that earlier, where people are migrating back, I'm like, well, the companies are saying, hey, you either come back or you get fired. What about somebody that went and started their life somewhere else? Now they're like, shoot, either you keep your house or you keep your job. Which one is it?
Yeah.
Well, look at the whole Airbnb.
Yeah.
A lot of people just buying second homes, going over there, and now they're asking you to come back, and they're hurting.
Yeah. And the other thing too is, like, we saw this in California. You saw big companies leave.
Yeah.
Friggin' Tesla left California and went to Texas. It's like,
Yeah, I ain't gonna pay all that tax.
yeah.
Is the people that work from Tesla here, how much of them actually wanted to move to,
I don't
Texas?
know. I don't know. I don't know. But again, unless there's some situation that, like, you were required to move, the people that don't absolutely have to, they're just staying put.
Yeah.
And that seems oversimplified. You're like, well, yeah, duh, that makes sense. Of course, if there's no reason to move, you're not going to move. But people that choose to move up are going to want to look for a window to do that.
Yeah.
So the desire to have like a nicer place, a bigger place, a more comfortable place, one that's closer to my commute, that's still intrinsically there for a lot of people. But even despite those things might being true for some, they're still not doing it.
Yeah. They're going to stay put, especially with these current interest rates that are much higher. They're just looking like there's no reason for me to do anything right now if I don't need to.
Yeah.
If rates started going down, we started seeing a lot more activity once the rates were in the low fives. We saw that like a month and change ago. We saw that people were forfeiting their 3.25%, their 2.875 because
it made
again,
sense,
it was making sense for them to forfeit that. But right now, with rates away, it's like, no way. I'm just not going to do it right now.
Yeah. All right. Other reasons for people staying put.
Yeah. What I think is a lot of people, the reason why they stay put is family. Families comes first for most of the people that we actually speak with, that we see the reason why they're staying here, So maybe they entertained it a year or so, like, we're going to be moving. But now it's like, well, what's going on? What changed? Now I just can't see myself being away, from family.
I think there's just no confidence in, what their next move could be because of what's happening, I think there's just, I don't know, the uncertainty. I'm good now. Why break something if it's not broken? And I think until things get better and we get more confidence as far as, things get cheaper, we start seeing things come down as far as consumer spending, then I think that's when people will be like, okay, maybe now it's the time. But for now, everybody's staying put because you see what's out there. Everything's expensive.
So what do you think, if it's separate from like moving because of work or moving because of family, what do you think are going to be the conditions that someone can feel comfortable going, you know what, I'm going to make that move up now? What do you think would need to change for that to be true?
Raises, job changes with higher wages, cost of living, substantially. I wouldn't say substantially, but gets controlled. It's moderate.
Even like general costs, like cost of goods and services,
gas,
food and groceries,
things like that. Like regular food, stuff like that. Because then that's going to get people to have more excess funds, be able to save better, be able to invest more money freely rather than running up their credit cards all the time. Then just taking money to pay that back to then going back to work doing the exact same thing until they until things get better. But that better won't happen until certain policies, certain things get passed. And I feel that goes back to people waiting to see what's going to happen, because if things keep the same right now, then we know what happens. But, you know, people are waiting for some sort of change, something different. They want to know, they want something different than what they saw these last couple of years.
Oh, yeah.
And that's why I feel there's no confidence, because of, you know, the climate that we've been in.
Yeah. Well, we've been seeing a lot of statistics with people too waiting after the election.
Yeah.
There's so much uncertainty. I've never, in my 18 years in this career, I've never heard that during an election.
Yeah, this has definitely been the peak of that.
Very,
I
very
think it's
different.
the most influential this is probably the most that I'm, you know, in tune on.
Yeah.
But I think it has the most influence in every industry,
Correct.
in every spectrum. Everybody has like one eye, like, well, how's that going to play out for me?
Yeah.
Like in every industry, wherever we, like, whenever I do have those conversations, there's someone inclined. We're not having hard conversation, but everyone's kind of like, we know what's happening. We're all waiting.
We weren't having this conversation in 2020. We didn't have it in 2016. We weren't doing this show.
Well, we literally were just like, okay, whatever happens.
No, I get it.
But
We weren't
forget
doing the show, but we were going through it.
Yeah.
Like
That's my
we wouldn't
point.
hear that crap.
People were not making it part of their decision-making
No.
process in those years. So it
was like, we're still going to originate regardless. We're still going to buy a house regardless. Okay, blue, red, it doesn't matter. We're still going with them. Now it's like,
Yeah. I mean, again, I always say like 2023 was, I want to say even in 2008, it was one of the worst crises that I experienced in my career. But 2023 felt just like that.
Yeah.
You
It was
know?
a hard
But
year,
at
wasn't
least
it?
then we knew what was happening. This time around, we thought we knew what was happening, and everybody was saying, "Oh, we're gonna see the 2008 meltdown now," but this is a financial now break that like it didn't.
it was a
Yeah.
new,
You know,
it was a
and-
new problem every day.
Yeah, and I also think it's because again we have a printing money machine out there. It just
Oh,
keeps
God.
going. It just
Yeah.
keeps freaking subsiding the bigger issue on hand. I mean, this is the biggest, deficit we've ever had.
Yeah. Yeah.
I want to say we crossed that 35 trillion. That's we only
unheard
make
of.
what? We only make like 5.
I don't know. You know what? I don't even know right
So-
now as we're recording this. I don't know what the actual number is. All
Yeah,
I know
it's
is
like 5.
you're- yeah, you're like over the target of a massive problem, because if you just continue printing money and just assuming and acquiring debt and you don't curb spending at all, it's just going to continue snowballing, and it just gets worse, and it gets perpetually worse, especially when prices are high
Exactly.
and inflation gets sticky or gets stuck.
And that's why I think people are staying put.
Yeah, die in
I'm
place.
staying put. I'm good where I'm at right now.
Yeah.
It's great.
Yeah, this could ultimately become one of the like windows of the last several decades where you see the most people staying put, even when they could economically move. You know, they might just go, I don't want to. Why the hassle?
Yeah.
I can stay comfortable here, despite these other variables like Brian's talking about becoming more expensive. My housing payment's intact. I got it on lock. I can afford it.
Yeah.
Everything else can move around me and be more expensive, and I'm still good.
Yeah.
And I think that is because housing payment for most people, their housing payment's their largest payment.
Yeah.
So
That's
given that is true for all the broader economy, for people for homeowners, there's no reason.
Yeah.
And from the conversations that I have, every day with friends, family, acquaintances, is, some people are either okay, they're good, or hurting. There's like no in between. Either they're like good, or it's been my worst year. Hey, I'm kind of struggling. My business is down.
Yeah.
Or I'm good. Everything's been up. Like, thankfully we did this.
Yeah. Yeah. No, it's a different conversation nowadays. Every time when I talk to the clients, when they come in here, oh no, this is not my forever home. I want to get an investment. I know I'm going to stay here long term, 3, 4, 5 years. So I'm buying it with anticipating that I'm going to rent a room, or I'm going to create the garage into something. The conversation is a lot different nowadays than they were in 2020. 16, very, very different. And I encourage that. I actually encourage that, because I think right now what you're supposed to do is look at a property and see what the future holds for you. If you really break the property down, if you only need a room or two, well then rent out the rest of the house, put a couple walls, put a kitchen in there, rent that thing out. And the great thing about it is California allows you to do all that stuff.
Yeah.
So I always encourage people and take advantage of the rules and regulations that these accessory dwelling units allow you to do.
And you bring up a good point. I feel that, if you want to break into the San Diego market, you just have to get your foot in the door.
That's
a
it.
condo, a small townhouse. And then from there, in 2-3 years, you set yourself up, and that same investment will help you get your next property.
Yep.
And then that next property will help you get the next property. And I think you have to set yourself up here in San Diego if you want to play the long-term game, because unless you make, a substantial amount of money and you can, put a lot
That's
of down
right.
payment down, then, you got to be very creative and, strategic with
Yeah,
how
it's
you
like
buy
they say,
here.
when you're dealing in the stock market, right? It's not they don't tell you timing of the market. It's time in the market. Well, that's real estate. If we look at it over the last 100 years, yes, we have our downfalls and stuff. But if you remain in the market, you're going to come up ahead.
So speaking of time in the market, quick snapshot for you and me, because we're the oldest two here. We've been around here a long time. Remember when we first started this business, almost 100% of the people we were doing home buying for was because they just wanted to have a yard in their own place, and they want the swing set, the white picket fence, like this. I want to have my own place.
The American dream.
Now it's like no, the house is going to do some work for me. It's going to be a revenue stream. It's going to have this and that.
Yeah.
It's completely changed. So
very different.
We are in a whole new era of home ownership. And I mean, I just was thinking about this. You guys were talking. I was like, man, I remember I never did a purchase for someone where it was because they were already thinking at the time of purchase that they were eventually going to turn to a rental.
Correct.
It's not because they're
wasn't like
stupid.
that. It's true.
It wasn't that way 18 years ago.
Well, that's what got me in the industry is like, how can I help these people achieve that dream?
Right.
I grew up with none of that.
Right.
And so for me, it was like, well, now that I have it, how do I help others, do that and achieve that goal and have that picket fence and have that freaking American flag right there hung right off their garage, It's like, how do we do that?
How things have changed.
But now it's so different. Everything's so different. And you millennials, you guys are freaking, it's crazy what you're willing to sacrifice. It's like, it's just nuts. Like Janan, where my son, where he lives, he rents 2 rooms out. Mm-hmm. But you know what? He comes and goes comfortably. You don't hear him stressed out on things. He's leveraging that, hey, I have these rooms that I don't need. Mm-hmm. I can get some of that, and I can live the life that I want to live, which is chill and not stress financially.
That's awesome.
It's
so cool.
Yeah, so his wife stays at home, takes care of the babies. They don't have to worry about daycare or nothing. Because nowadays, I'm sure daycare is like $2,000, $2,500, and if you want to feed them, it's another $500.
If you want to feed them,
luckily it gets subsidized. So yeah, but it is expensive if it's not.
It's very, very crazy out there. Things have gotten very, very expensive, and that's why I feel a lot of people they're considering that fact and they're staying put.
They're just gonna stay put. Yeah. Well, great job today, guys. What was your favorite part of the show today, Brian?
The great stay. I think it had a lot of actual true information, and it gives people an actual outlook of what really is happening and why are the reasons the market is how it is, why people aren't selling, and why people are reluctant to even enter the market. But amongst all that information, there is opportunities, there is ways. You just have to be willing to sacrifice. You have to be willing to roll with the punches and find the way, and it gets done one way or another.
Find your spot and then go. Yeah. Memo, how about you?
Mine are the millennials paying attention to politics. Like, what a way to go. They're paying attention, It's like, I'm glad that there's a demographic group that are paying attention to the bigger picture, because politics does have a lot of huge impact. And you can tell, just like in stocks and stuff, people are very clever, paying attention to the politics that go behind it by studying the company, in this case, if these kids are studying the Republicans, the demographics, the Democrats, if they're paying attention to what they have to bring and they can make a better decision based on that, I like that these kids are paying attention to that.
You hit it perfectly. It's like betting on politicians. Just
Why
like
not,
you
right?
Or just like you invest in companies, you invest in people.
Yeah, because you got like Kamala saying, hey, I'm going to come with that $24,000,
well, who's paying for that
buyer,
first? And
right? Why? And these guys just come with that understanding. Like I like that. I like that these kids are getting, I say kids because there are kids.
Kids to us, yeah. They're getting involved.
Yeah, I'm impressed with the millennials for sure.
Cool. Mine is the housing affordability crisis doesn't exist in much of the country, so why are America's moving? And this is because price isn't everything. I think that underneath the surface of all this, you can say that places are cheaper, but if people don't want to move there, they won't. Yeah. Price is not everything. Yeah. And I think that is, for me, that's a good sign because in business and in such competitive markets, there's so many products or services where it's the race to the bottom. Who can offer the cheapest price for the most amount of things to the most amount of people as quickly as possible and as recurring as possible. And it's nice that price isn't everything when people are looking to where they're going to move. Yes, obviously work is going to be a main thing. Family is going to be another, again, going away from them or coming close to them. Yeah. But yeah, I mean, if there is a place in the country that has houses for $150,000 and $200,000. You would think everyone would be flocking to them, but they're not. They're just people trickling to those places because they want to or they need to. And that's nice because although I would say consumerism just dominates so much of our life, does not seem to be true when it comes to housing.
No, absolutely.
So,
you know, a lot of people don't understand is a lot of investors won't go into those areas because of the depreciation also.
Yeah.
The wear and tear in your property.
Yeah.
After the 5th, 6th year, they have to go back in there, put another $10,000, $15,000, maybe even 20. If you do the math, sometimes that, whatever you're making, $400 or $500 a month, you know, it's not going to be so much of a great investment when you really look at that, you know, when these properties are requiring that much repairs.
Sounds like a good place to go. If you're just looking to have a place for yourself, a place you can afford, then there are definitely a lot of places in the country you can move where maybe if price is your thing and is the only thing, a lot of places you can go do that.
And again, there's a reason why the prices of homes are so much higher here in those areas. It's because it's in high demand, you know, and people do love the area and then it has a lot to offer.
And I feel like once the satisfaction, the value you get from what you're buying outweighs the price, then it doesn't really matter how much you're paying for it because it satisfies you and you're getting what you want.
Yeah.
I like that.
Yeah, because if you prioritize something else higher, then you're going to serve that thing.
Like money's going to influence it, but at the end of the day, how you feel about it and how you bought it, and if you felt good about the purchase, it doesn't matter how much you spend.
You'll figure it out.
Yeah, because there's plenty times I bought stuff and I'm like, why did I buy that? And there's stuff I bought that. I don't care how much I spend it, I'll buy it again.
Yeah.
There you go. Yeah, as the world turns.
Okay.
So do that.
Well, thank you guys for another great show. I'm glad we're all back together again for this week's episode. Thank you all for watching, and thank you for hanging tight with us as we move into a new season of Mortgage Heroes. Now as Mortgage Heroes team powered by eMortgage Capital, we can now do lending in a number of states outside of California. I think it's 44 now, right?
46.
Is it 46 now?
46, yeah.
I saw 47, and then I saw 46 and 44. I'm like, I'm going to go with the low number because I actually am waiting. There's a couple that are still pending still. So
just put it this way, practically everywhere.
Practically everywhere. So if you are in a need and you need a purchase or refinance outside of California now too, guess what? These guys can help you. Thank you so much for watching the show. You guys did a great job today.
Thank you.
Remember to like this video, subscribe to the channel, and send this to someone you know and love to help them win in mortgage and real estate. We'll see you again next week.